Yeah, it looks like it, Ryan.
Yep. How's that been?
Good.
Up and running?
Yep.
Excellent. Should we kick off?
Yes, please.
Hi everyone. Thanks for joining us again. Good to see you all back. As Gil said, we've been receiving some great feedback about these sessions. Of course, always open to new suggestions. You know, if feel free to mail them through or let us know if there are topics you'd like covered that we haven't been covering, or any feedback is great. All right, let's jump in. So today's agenda, we had you might remember last month, we ran a bit of a survey asking a few questions about these sessions and what people were finding interesting. And we had a bit of a prize for that survey. So we'll announce a winner in just a few moments' time after we finish our housekeeping. I'll start off taking you through our usual virus and market update with a focus on Australia, but also touching on what's happening around the world. And then Gil, in Gil's usual insights section, is going to take us through a bit of a section called Why Are We the Lucky Country? As we run through, as always, please don't hesitate to ask questions in the chat area, and we'll try to cover off on those at the end. Housekeeping as usual, we'll try to go for about 15 to 30 minutes. We haven't always been successful at keeping to the 30 minutes, but we'll see how we go. It might sometimes runs just that touch over. Please ask questions via the chat icon, as I just mentioned. If you're having difficulties with your sound, try turning off the video. It can sometimes open up your data to make sure at least the sound is coming through a bit smoother. These sessions are recorded and we put them on our YouTube channel. So if you are interested in viewing any of our past sessions, feel free to jump online onto YouTube and have a look at those. If you have any trouble accessing them, please get in touch and we'll help you find them. Also, if you'd like a copy of the slides from today's webinar or any previous webinar, let us know and we can always send those through as well. As usual, this information we're covering off on today is designed to be general. It's designed to be informative, but it's not designed to talk to any particular client and their situation. It's more of a general overview of where things are up to and how markets are doing generally. Of course, if you ever do have questions about your own portfolios or your own structures, please get in touch and we can always organize a meeting. All right, so our survey winner. So we have Peter and Jan M. Congratulations. You've been drawn as the winners, and we'll send you through quite shortly a $30 Dan Murphy's voucher. Thank you again.
And in case there's any confusion, it is a Peter and Jan that are logged in this morning. We just don't want to give your name out. That's privacy issues.
Absolutely. So we'll send that voucher through shortly. Thank you again, everyone, for participating. We had a good response level, and that's really helpful for us in guiding our future sessions. And it also shows that everyone's quite engaged and still enjoying our seminars. We have decided, as things calm down a little bit, we have moved to fortnightly, and we will eventually go to monthly. Our feedback was that people would like us to continue these on even after Corona dies down. So but we'll move more to a monthly structure. Gil, do you recall what time frame that's happening?
No, I think that the plan is possibly to make this the last one, or the next one will be the last fortnightly seminar. Then we might move to doing them monthly thereafter. So perhaps one more.
We might do
and then we'll move on,
because we're expecting some information through from the government later in the month. So it might be helpful to do a session later in July, and then we'll move to monthly.
Okay.
All right. Well, I'll jump into the virus and market update. So the virus story, as you can see, we're a fair way off the worst of it. We've had a really good stretch without any kind of significant increase in virus levels. things started opening up towards the end of May, early June, economically. You know, some of the government lockdown provisions were starting to be relaxed quite markedly from the 1st of June onwards, and we didn't see an immediate spike in cases, which was very promising. Now that we're a few weeks in, we would expect to see a bit of an increase with, as I'm sure you've all noticed out and about on the weekends, there are a lot more people at the cafes, things are getting back to normal, gyms have reopened. So, you know, we would expect some kind of increase in cases, which we have seen over the last week or two. Over the last couple of days, we have seen a bit of a spike, mainly in Victoria, but nothing like what we saw during the worst of the outbreak. So we do need to be careful as things continue to open up, but it seems that things are going along quite well here in Australia as we sort of try to get back to some sense of normalcy. One thing to focus on as well is cases are increasing, but our number of deaths over the past month have only increased by 2, which is very promising. You know, for us to have an increase in cases, yet treatment and death rates, with treatment's obviously going quite well, death rates are staying down. That's really what we want to see. As we look around the country, there's only 1 case nationwide in intensive care and only 15 hospitalised, even though we do have around 655 active cases. So yes, the virus is still around. Yes, cases are increasing, but we seem to be good at keeping them under control, and the severity of cases hasn't seemed to have spiked at this point, which is very good. What that means for the Australian market, as you'd expect through June, as things started to open up and we didn't see an immediate spike in cases and everyone was feeling great about being able to take a bit of a drive and get out to the parks and have a coffee down at the local cafe, there was a lot of positive sentiment in the market, and we saw a really good increase in the shares at the start of the month. As cases did start to come through, the market, as it does, tended to have a bit of a knee-jerk reaction, and we had a bit of a sell-off over a couple of days in about mid-June. But in a really good sign, that only lasted for a day or two, and then the market, you know, following a fair bit of positive sentiment, was quite happy to bounce back strongly around the 15th to 16th of June, and has sat in a holding pattern ever since. So even though we've had, you know, fairly poor economic data and a rise in cases, the market is still, you know, in a tentative holding pattern rather than dropping badly still. So that's a really good sign going forward, that there's a lot of enthusiasm out there, and as long as we don't see any major setbacks, we'd hope to see that market growth continue over the next 6 to 12 months. If we look at the longer term view, that tells the exact same story. So as we started to talk about opening up the economy in late April, the market responded. We had the really good initial uplift, and then there was a little bit of concern or a little bit of pause in seeing how things would go as we open up the economy. But as the Australian story stayed quite positive, as our cases didn't spike, we've seen quite a good run, or quite a good positive trend from about mid-April, even through to now. So the falls we saw mid-month weren't enough to stop that long-term sort of positive path we're on. We're just seeing now that shows quite well we're moving a bit sideways at the moment, as we're seeing what happens over the next week or two, as see what really happens with new cases, and will they spike or will they stay under control. Going forward, if we look at the Australian story, what do we really expect in Australia, or what are we seeing? So as I just mentioned, markets are tentative at the moment as cases have risen, but the overall outlook is still positive. As we saw from those graphs there, rising cases have meant sideways markets, not a prolonged steep fall, which is great to see. Markets are still up around 30% since their lows in mid to late March. Hospitalisations and death rates are low. On a very positive note, the government is still quite focused on economic recovery. Even though we've seen a slight increase in cases, we haven't seen full restrictions being reinstated, and we haven't really heard strong talk that there will be. What we've seen is more of a targeted approach. Rather than hit the whole economy with another lockdown, they're thinking of more innovative ways of striking a balance between managing the virus and allowing the economy to continue to come back. So we've seen the Victoria Premier yesterday suggested flight restrictions into the state to give them time to address their current virus spike. They've actually looked at locking down specific postcodes in Melbourne rather than a city or a statewide lockdown. Queensland, even though cases are rising around the country a bit, are still looking at opening up their borders next Friday, excluding Victoria. So we're seeing more of a balanced approach from the government rather than a blanket dampening on the economic environment, which is really good. And we hope to see the market. That's one of the reasons we think the market is responding, fairly well, even though we have seen a bit of an increase in cases. But of course, we are entering an uncertain period, so we are likely to see, although we think the mood is generally positive, we're likely to see a lot of up and down on the market. We are likely to see a lot of volatility. We've got a lot happening over the next couple of months. As restrictions ease, will we hit a second wave? We have the slight increase now, hopefully won't turn into a broader and sustained spike in cases. We have US elections coming up. We have JobKeeper and other stimulus packages due to end over the next coming months. Will the government extend those, or will new stimulus packages be released? We're yet to see. We expect to see some guidance from the government on July 23rd, as I mentioned before, later this month. So we'll cover off on what they come up with in our sessions. So while there's a lot going on, that will inevitably mean, it won't be unusual to see 2% up, 2% down, around about that level of volatility in the market we would expect over the coming months. Taking a world view now, the virus cases have hit about 10 million globally in total. We've seen a little bit of an increase in cases through the Asian region as they came out of lockdown, and of course South America have seen is still a part of the world where the virus situation is growing. In Europe and America, though, there's still obviously work to do to bring everything under control completely, but their virus situation is staying relatively under control. We're not seeing exponential growth in virus cases, which this graph, which we look at every couple of webinars, definitely supports that. So the United States, after struggling to bring things under control after a late start, are starting to see their curve flatten still, even with their economy opening up. Of course, Australia, China, UK, France, and other European countries, which we don't have on this particular graph, but very much the same story. We've seen a good flattening of our curve early. Brazil, India, Mexico, a lot of South American countries are still struggling to bring their situation under control. But overall, the United States, China, Australia, and Europe have done quite well in flattening their curve and opening up their economies, which is good. So what do we expect to see in terms of the global story? Well, governments, as I just mentioned, are keen to strike that balance between economic activity and rising cases. We're seeing a really good willingness of governments to take significant and fairly innovative action to try to make sure that economies recover over the long term. So in the US and Japan, we saw the government or the central banks buy corporate bonds. So rather than just throw money at the problem, rather than simply providing stimulus, they're taking a longer term and committed approach to tackling this virus, with the intention of really giving businesses and the economy confidence that their things will be okay over the long term. They're there to make sure that that happens. So we haven't really seen that level of intervention, especially by the US central bank. Even after the global financial crisis, the the answer was to throw money at the situation, print money. Now we're seeing them take a range of different approaches, which will tie them and commit them to the business world, to the underlying economy much more over the medium term, which hopefully is a good sign for global markets. It shows that, again, even if we do hit a second wave, or even if we do hit a bit of a backstep, governments and central banks are absolutely committed to supporting their economies and trying to bring growth back to their economies over the short, medium and long term. Some good news out of the UK. There have been some clinical trials mid-month of dexamethasone. Hopefully I pronounced that reasonably okay. It's a steroid-based treatment. What they're finding in early clinical trials is it seems to have significant potential in controlling critical cases, reducing death rates for those that are critically ill with the virus. It's not a cure, it's not a vaccine, so it doesn't cure the virus completely, but what it does is it removes some of the fear. It shows people that, look, even in the worst cases, it might not be a condition that is as fatal as it was at the start. It seems to be working quite well for people requiring ventilator care and intensive care. So we'll see how that goes. If that progresses through clinical trials and continues to show a lot of promise, we think that's just another great positive sign for global markets and economic recovery, as people will be much more willing to get out there, support the economy, and governments will be much more comfortable keeping their economies open and going if the virus is still a problem, but less of a critical or a fatal type problem. As we look at the US market, that seems to, as you can see there, a lot of those global messages very similar to what we're looking at in Australia. Yes, caution's needed, but there's a general positive mood, general feeling of optimism. And we can see that definitely here in the American market, which is almost an exact overlay of the Australian market. So we see here there's strong recovery from mid-March onwards over the last couple of months, or over the last month in particular, as they ease their restrictions across the US. We did see a bit of a slowing in that initial bounce back, but as we can see, the mood's still very much positive overall. And we think as long as we don't see spikes getting back to the levels we saw in mid-March, we think the market's still on track to move forward in a cautious and volatile manner, albeit, but in a generally positive direction over the next 6 to 12 months. I think, Gil, that brings us to your part of the story. You're on mute there still, Gil.
Thank you, Ryan. Apologies for that, guys. I was twiddling away in the background. So I'm going to take the screen back now. So Ryan, have you got the slide up that says Gil's Insights?
I do.
All right. Thank you very much, Ryan. Stories are positive, although I think we are finding that there are opportunities for this to show its head again if we don't take caution. Victoria clearly has a problem, and they're responding fairly assertively. So that's a positive thing. I'm just admitting people right now into the session. All right, so what I wanted to do today was to just have a bit of a chat about the economics of things. There's a little bit of difficulty here coming up with new content every week, but I'm trying very hard to just spin this in a way that makes people understand both the positives that we have in this country, and I say it every week or every session, who would live anywhere else other than here? But also look at what's going to be coming up. So if we look at the last week or so, we've seen some great content for the media. We've got Australia spending a fortune on military spending and clearly entering into some form of a new Cold War with China. What does that mean in terms of the impact on Australia's exports to China? What does it mean in terms of job creation in Australia if they reduce the job seeker benefits down? what does that mean in terms of the amount of money that Australia has to print or borrow to keep the infrastructure spend going? So it'd be churlish of me to suggest that I know the answers, but I've got to think we can actually get a pretty decent read on what the next 3 months of conversations are going to be like in the media. So putting aside all the drama and the hype associated with yet another person's got coronavirus in Victoria, or people aren't saying that they're willing to be tested, which frankly I find amazing. I mean, in suspend civil rights in this instance. What I want to get to is what the big 3 month, 6 month, 12 month story is. We're going to do a little bit of that by looking at the current trends. Then we're going to go back 100 years and we're going to come forward again and see where does this land. So let's get started. Right. So this graph was put up a few weeks ago in our slides, and it wasn't that big a deal at the time, but clearly this second wave thing is happening, whether you call it a second wave or just minor outbreaks. It's happening in Melbourne, nowhere really other than Melbourne, but it is clearly a big drama in the US. It's clearly out of control in Brazil, and the UK, or basically Europe, is very vulnerable to this. So there's one of the great things about this country is that we actually have a lot of space. There are pockets in the community, and we're not going to go any further than that, that clearly have some behavioural traits that are different to perhaps what the government would want us to have. So when we look here, starting at the bottom, the most vulnerable countries in the world seem to be European countries. And I'm not in any way trying to take the light out of this, but we're in this really interesting dynamic right now where China is clearly picking a fight with the Western world, led by the Five Eyes that we've talked about, which is America, Canada, Australia, New Zealand, and the UK. But the problem is that China can't do anything without the materials and the energy that we export, which is coking coal, iron ore, natural gas. And our biggest competitor in this space is Brazil. So we're in a very strange scenario where one of the most vulnerable countries in the world is the only one that's our competitor in terms of looking after China's needs going forward. I do think that the impact is going to be much worse and much better than these computer models suggest. But what I do love is the fact that Australia is right up here with the highly controlled environments. I'm not sure Indonesia is correctly placed there, nor do I think India is quite as elegant as they're putting there, because India is clearly spiraling a bit at the moment. Just love the fact that Australia's at the top of the list. And if I have to pick someone that's going to be struggling at the bottom, it's our closest competitors in terms of export and energy, which is Brazil. So that's a positive story. Now, I do want to get into this question of why does it always seem that we do okay? What's the answer? And it's got nothing to do with a strong market economy and things like that, although that's clearly what's going on, nor is it because we're some sort of powerhouse of innovation. That's not true. The answer is quite simply the numbers in this country, and I should have said show me the numbers on this graph because I used this slide a week or two ago. The answer is quite simply the numbers in this country make more sense than anywhere else in the world. And it comes down to things like this. This is going back to 1900. Australia, for better or worse, has been a powerhouse of consistency and economic growth for 120 years. This is 100 years of data, but you can see here that there are only very few periods of negatives here. We have World War I, we have the Great Depression, we have World War II. Well, they are what they are. But I speak with great confidence in saying that we're not headed back to World War I or II. Those rules belonged to an environment or an economy that needed raw materials. So back in those times, it was about food production. It was about, in World War I, it was about mining and the energy and so forth that they needed to dig out of the ground. The resources booms, or the resources requirements that countries invaded each other for, that model doesn't work anymore. And we've seen it here in this post-World War II boom, right? In Australia, there's quite simply no one coming here and dragging our resources to an unproductive place, either, you know, if we're looking at countries invading or anything else. So what we're not seeing here Australia is this economic powerhouse. What we're seeing is Australia is funding the rest of the world in terms of economic growth. So when you remove the world wars and you remove the Great Depression, and if anyone wants, we did videos on that a little while ago, because the Great Depression isn't likely to happen again, because they've made a bunch of mistakes back then and they're not repeating them this time. So you remove World War One, you remove World War Two, you remove the Great Depression, and you find that the story for Australia is really positive. So again, we're in the right place, selling the right products to the right people for the right future. So why have we performed so well? 3 reasons. This is the stock market, but ultimately your investments are linked there. And if you remember the last seminar we gave, we're in this funny world where there's a whole bunch of cash floating around the world, and the government's printing cash right now. And it's very cheap for business and people to borrow money. What can they do with that cash? They can go into term deposits, which are going to pay nothing. They can go into government bonds, which likewise are going to pay nothing. You can hope and speculate around gold and things like that. That doesn't produce income. Or you can move towards the share market, which is one of the reasons, with all this massive portfolio of cash in the world, that I think we're going to see a lot of strength in the share markets over the next 3 to 5 years. Now, why does Australia do so well? Quite simply, Australia has returned more money to investors as dividends than any country in the world. We have one of the strongest immigration rates per head of population in the world, and we export fuel, food, and resources to a world that needs it. Now, those dynamics haven't changed. I get very frustrated, as you're probably familiar now with the media. I'm afraid this country is one of the least racist countries in the world. Right? We are more open to immigration. Just turn up here and work hard and don't make it any worse, and we're happy to accept you. So we have this triple whammy of things that are going to keep this a positive place going forward. So I'm just going to do a little bit now on shares and come back and talk on the other things. So one of the reasons why the Australian market is so fondly thought of, and the Labor Party figured this out too late at the last election, is franking credits. So if company X earns $100, it generally in this country pays about $30 tax. And assuming it pays that $70 to the shareholder, the tax office will actually see the shareholder as receiving the $70 and the $30 tax credit. So much the same way if you're working at a normal job, they withhold 20 cents in the dollar tax. That gets added back into your income at the end of the year when you do a tax return. The same thing applies here. Now, for the average retiree, they've received the $70, but they don't pay tax. And from everyone, I think that's on the webinar today, you don't pay tax. So that means that you've actually paid $30 more than you needed to, and you get the refund back again. And that's it. It's as simple as that. Franking credit refunds come back to you if your tax rate is lower than the company tax rate. And that is, in a world where we've shifted a little bit from growth to income, as in show me the money, we're going to find a lot of support for the Australian history of dividends. And that's a very positive thing. And all of your investments and all of your super funds have strong exposure there. And I think I've said on a previous webinar that 2/3 of every dollar you ever make out of the share market in this country is going to come to you as income. Now, I'm actually going to contradict that slightly with this data. This is 120 years of data, so perhaps things have changed in the last 50 years. But there's some fascinating figures. So I went and did a bit of digging. So it's 120 years of data to 2019. The average return for Australian shareholders was actually 13.2%, which is a phenomenal number. It's one of the highest in the world. There's certainly higher than any of the other major markets in the world of Europe and the US and the UK. We leave them a long way. I'd actually been digging around looking for data on the US and the UK and France and Germany and so forth. And it's very difficult to get income data out of those countries. I don't think they pay as much income as Australia does. But when you look at the 120 years, there were 80, I think it was about 89 or 91 positive years, and there was about 21 negative years or something like that, 19% negative. Now, this figure blew me away, but I checked it. $1,000 invested in 1900, if you had $1,000 invested in 1900, would be worth $529 million today. That's how strong the Australian market has been. And it does strip out the rest of the world. $1,000 in 1900 would be worth $140,000 in today's money. So what we're seeing here is that the Australian stock market, if you've got the money to put aside and let it roll, is going to has outperformed inflation by 3,800 times, which is a staggering number. However, it just again is an indicator that those that are capable of playing the long game are going to benefit here. And again, we're seeing a world where money has very few homes anymore that aren't the stock market. So one of the things that I think is going to happen, the American market tends to not worry about income very much because companies keep the money and use it to buy other companies. So if you're looking for a safer place to have exposure to the stock market, Australia is starting to look like a very healthy place. And I think we've seen some strong returns in the Aussie market over the last 3 months. So I think the data's bearing that out. Now these are figures, you know, kind of I found very interesting. So if we look at the net migration to Australia from overseas, now I don't believe this takes into account deaths and a few other things, but the net migration into Australia over the last 20 years has grown from about 50,000 up to 250,000. Now, there's no question that it brings some tensions in some part of the country. To a certain extent, those of us that don't live in Sydney and Melbourne probably aren't overly aware of those tensions. But we're seeing 200 to 250,000 people a year coming to Australia. There are some that are going home, there are some that are dying, and we'll show those figures in the next slides. But this figure here, this graph actually tells a really key part of the story. If you've got a small country like Australia, with 20, 25 million people in it, right, and you're bringing 250,000 people a year in, that's a net growth rate of 1% plus of the population. And when you've got a finely balanced economy with jobs and property prices and mortgages and share markets and things, 1 or 2% supply and demand in the right way drives prices up, and we've all enjoyed that over the last few years. What I did, and I'm just really stretching a little bit here, is I overlaid the cumulative return out of the Australian stock market since 1925 with the immigration rate into the country since 1925. So we're seeing around a net, if you take deaths and people leaving Australia, of about 200,000 here instead of 250,000 coming in. But we've seen a pretty strong correlation here for the last 60, 80 years, where as immigration has grown, so too has the country of Australia. These graphs here correlate with that first graph I showed you with the economic growth of Australia being very positive since World War II, sorry, which starts about here. So straight after World War II, we saw immigration surging, settled down to 100,000 and growing ever since. So again, the untold story in this country is the blue graph, that in the last 40 or 50 years, we've kept the economy growing because of immigration. That is not going to change. Right? The politicians won't talk about it. Nobody talks about it because it's not easy to grow this country unless you have more people creating demand. You can do that by making babies, which is the Peter Costello solution. One for mum, one for dad, and one for the country. It didn't overly work well, which is why the immigration rate jumped up afterwards, right? So this is the Costello years where they were down around 100,000 and it jumped up afterwards, and that's one of the reasons things have done well. Now, there's an author that lives in Melbourne named George Megaloganis. If anyone finds this very interesting, I find it fascinating, the real truth behind things, not the truth you get out of the media. This book on the left-hand side, Australia's Second Chance, it's a study into the economic growth in Australia, and it maps it and talks about immigration, going back to the Chinese in the 1800s and the various groups of people that have come to this country over the years. And the short version is it is all about immigration. So there's an excellent podcast if you listen to Conversations on ABC Radio, which I do all the time. I recommend this one. Look up George Megaloganis on there. You'll find it fascinating. You have to accept the reality that we are an immigrant nation and we're a multicultural nation. And I think as a general rule, we've done a tremendous job of doing that. I tire of people criticising us. I think Nobody in the world has been as successful as making multicultural countries as we have. But the facts are very rarely in the headlines. The facts are always in the interesting stuff in the background. There's another fascinating book this guy wrote, which I just recommend because it's very interesting. It tracks the peak and the decline of the Richmond Football Club and the rebirth of Richmond to now being a leader in the AFL. I'm not an AFL fan, so it's not about that. It's actually an analysis into how you manage people and teams in modern Australia. And it gives a very strong criticism of both Labor and Liberal politics. And it makes perfect sense. Again, great podcast on the subject. Have a look at either of those. They're fascinating. And it gives you, in many ways, a lot of hope for the future. But we've got to change a little bit. We've got to embrace certain hard truths. For me, one of the things I would do is I wouldn't allow immigration so much into the capital cities. I'd actually mandate, come here by all means, but come here and go out, spread out across the country so that the benefits of immigration are felt in the rural areas, not just in Sydney and Melbourne. Now, where are we going now? What's happening in the next 6 months? What are you going to hear about in the news? What's the new media going to say about it? And they're obviously going to look for the most dramatic way of saying it. So having a bit of a think and just a bit of a scratch looking forward, we're going to see JobKeeper wound back in a few months' time. If you just excuse me for a second, I'm just going to mute you. Sorry about that. So JobKeeper will be wound back. That's going to see a tick up in the unemployment rate. Right now, we have 927,600 and change people unemployed in this country. That doesn't allow for the JobKeeper program. So when that winds back, they're going to find a lot of people on the unemployment heap, if you want to use a horrible phrase. That's going to have an impact. The media is going to talk about it. The Labor Party is going to talk about it, but it's an inevitable thing. It's just like, honestly, the tide coming in. If we look next, the current account, that's a typo from my point of view. The current account deficit is going to start to be talked about. The current account deficit is how much we're importing versus how much we're exporting, right? So with what's going on with China, there's going to be a little bit of an impact there, but I suspect it's going to be okay because they still need coking coal, they still need iron ore, they still need natural gas, and they still need food, right? But we're going to be, there's always a delicate balance when you're a government between printing money, which is what the federal government can do, and borrowing money, which is all the state governments can do to fund things. So with the depressed economic activity and a slowdown in the number of house sales, state governments tend to take about 50% of their revenue, for New South Wales, it's about $39 billion. State governments take about 50% of their revenue from property transactions. Property market is definitely going to be depressed. Everything's going to be a little bit muted. So they're now starting to talk about perhaps changing the GST rate. And I don't think they stand any chance of doing that unless they get both houses of parliament in the next election. So for me, I don't see any choice here, but I don't see any alternative or any result other than the Liberal Party getting back into Parliament. Depending on how Labor plays it, they're going to keep the balance of power, or maybe it'll be both houses of Parliament go to the Conservatives, and we'll get a little bit of legislative change. Because one of the great frustrations at the moment in this country, it has been for 15 years, we don't like either side. We can't stand either of them, so we end up voting 50-50 and give the Greens or someone in the middle a casting vote. That sounds good in principle, but in reality, it's been a paralysis for this country, starting from John Howard years going forward. There's been weak leadership because we didn't like the leaders that they were offering to us. So that I truly hope that we're going to see strong leadership going forward. It can only be Liberal Party at this point. But depending on how well ScoMo plays this, we may end up with some strong government for a while, which is going to be a good thing. We're already seeing it in this morning's media, military spending, $239 billion over the next 5 years. That's in line with the Five Eyes and China having a standoff. You know, there's no question about it. A couple of weeks ago, I gave you that economic declaration of war that the Americans have put out. There is no question here. It's that they're forming sides, and I can't see China winning it because Europe, America, Japan, Australia, they're all saying no. We're not going to kowtow to what the Chinese agenda is. But the military spending bugs me a little bit, not because it isn't necessary. I do see it as inevitable. What troubles me about it is that we don't have a military infrastructure in this country, so we don't have the money that's going to be spent there won't be spent heavily in Australia. So the planes and the bombs and the submarines and all those sort of things will be largely sourced overseas. So that's a negative, but it's inevitable. We've talked about China enough now, but it's a matter of saying, no, we will not kowtow. We will be seeing tax reform. Don't question that. Fortunately, it doesn't affect the majority of you. You're pensioners and retirees. You don't pay tax. So you'll see it in the GST potentially. And as much as I don't like paying the GST more than anyone else, I think the GST should change to 12.5%, maybe even 15%. It will allow a lot of state government taxes to come down. And we're always free not to spend our money. So again, that will only happen if the Libs get both houses of Parliament. It will not be popular, but they do it early, and then within the 3 years, hopefully the numbers will look good. So expect we're going to see tax reform and infrastructure. Lastly, we're going to see, as we're seeing it now, for example, with Virgin Airlines, right? They're going to go bankrupt. There's going to be a lot of companies like this go bankrupt, which is going to produce a lot of mergers and acquisitions as good companies that are cashed up are going to purchase the companies that are struggling. So again, going to be a lot of news in the media. That's going to be good for the stock market. You're going to see negatives, you're going to see positives, but the net effect, as always, will actually average out okay. Now, just to finish up, I have just looked, I went and looked at government infrastructure priorities, and this came from an interesting document that the government published last year, but it's worth looking at. So high priority projects, these are the things that the infrastructure research body, I've forgotten the name of the government body, identified as being really, really important to economic growth in the country. Unfortunately for us, it's all Sydney based in New South Wales. And this again goes to the point of how many more people can live in the damn city. It's an important thing though, and they're going to spend a lot of money. In Victoria, pretty much the same story, spend it around Melbourne. Queensland, again, it's in Brisbane. And Western Australia, the rail extension is again in Perth. So what we're seeing here is a high priority on the biggest cities, which disappoints me because I drive around the Maitland roads, but it's going to create work. It's going to create a lot of work and help the economy. And so inevitably, this kind of infrastructure spend is going to happen. We don't have to ride on these toll roads, which is going to be great. So that's a positive for us. The priorities that are identified as being not highest, but still important, are Melbourne, Brisbane rail link. Unfortunately, it's not a high-speed rail, but that's because the majority of the economic growth comes from selling coal and shipping materials, not people. Again, road upgrades in Sydney, public transport in around Melbourne, North Coast Rail in Brisbane. So there's a lot of railways, a lot of roads and things like that, and they're all going to be very good for the country. In Western Australia, they want some water and things like that. It's quite a fascinating list, but the short version is it really does create everywhere except potentially in South Australia. It's about transport and movement, which was, if any of you are familiar with Franklin Delano Roosevelt, he built, I think it was FDR, built an interstate freeway network in America, right? And that was one of the key drivers of American growth from the 1950s forward, was the free exchange of goods and services across states. It's the single most important thing they can do in Africa, is to create stable road infrastructure so that people can move around the country or the continent safely. We need it here in Australia. In combination with economic, with immigration, it's going to have an impact. Initiatives, again, it's a similar sort of stuff they've rated as important. It's essentially railroads and some shipping ports and things like that. One thing that I would love to see, and this will all be reviewed because this was 12 months old. One thing I'd love to see is spending on the internet, because I think we've proven here that country can operate from home as long as the internet connectivity is good. So I think we're going to see some spending there as well. So that's pretty much it for me. There are a lot of positives. We're going to see the negatives, but most of the headlines are not going to tell you the full story. We have, generally speaking, except for Melbourne, a lot of good things going on in this country with the coronavirus. So I trust everybody's enjoyed today. Please, if you have any questions or want to know any more, contact us. We certainly are interested in your thoughts on what you might like to hear more about. We find that this is a fascinating time to be alive. And again, I say it and I don't apologize for saying it every time. Thank God we live in this country. All right, so just to finish up, knowing what to do with what the television tells us is the most important thing, not just listening to it. The team is mostly back at work now. I don't have meetings today, so I get the luxury of working from home, which is nice for me. Ryan, I think Ryan sleeps in that suit. He's never wears a suit and tie. God bless him. But the team is at work. We're ready to take your call. If you have any questions, be in touch. I think everyone's familiar now that the portfolios have done quite well over the last year, relatively speaking. So this has been a very dramatic time to be an Australian. It hasn't been a terrifying time to be a retiree, which is a good thing. So as always, I trust you've enjoyed today. Thank you for your time. Please take care. Keep your family safe. God bless. Talk soon. Bye now.
Thank you, everyone. Bye.
Bye, everybody.